24 RETV. My name is Paul Cheema and I'm your host. I'm also a mortgage broker and a real estate broker. If you need any advice on any of these two industries or information you require for your mortgage or housing needs, feel free to call me at 647-333-2273. May I also ask you to kindly go on our YouTube channel PC24 RETV and subscribe to the channel. It would be great if you can share it with your friends and family members. Every Wednesday, we are joined by amazing guest from Abbotsford, BC, Amrit Sura. He is here with us today, and we will talk what's going on in BC and how the housing market is changing. Today, Bank of Canada made an announcement, and the policy rate has been announced. The monetary policy will be broadcast live on PC24 RETV at or around 11 o'clock. So please let me get our guest on stage. Welcome, Mr. Amrit Sura.
Good morning. Good morning.
Good morning. Before we continue, I would like to wish many congratulations to those people who are celebrating their birthday today and anniversaries. They have moved to their new home, and also they are enjoying and cherishing the great moments of the birth of newborn in their families. We usually bring a quote, and the quote today has been created for you by some amazing personality. His name is Albert Schweitzer. He was born on 14 January 1875 and he passed away on September the 4th, 1965 at age of 90. He was an Alsatian German-French polymath. If you remember polymath are those people who have knowledge of many subjects and they can solve many intricate problems. So he was a theologian, organist, musicologist, writer, humanitarian, philosopher, and physician. So I won't go much into detail today because we have very short time, considering that we are going to broadcast live the stream from Bank of Canada's Governing Council. So here is what he said. He said, happiness is the only thing that multiplies when you share it. So I guess I don't have to explain that quote. It's pretty simple and straightforward. If you share your happiness, you feel more happy. It increases. So this is where it is. And yes, Mr. Sura, welcome. How is BC going on today? How's the weather there?
BC has now changed its weather pattern. We're getting into the autumn season, so fall for the North Americans. Lots of like we mentioned lightly last week, and one of your other guests, you had someone come in and discuss preparations for seasonal changes for your homes. So a lot of that activity is going on, and obviously with what the financial leaders are implementing as a strategy, people are continuously watching and waiting. So transactions wise for resale activity, my thoughts are people are going to hold off until the new year if they're in the process of purchasing, unless they're in a dire need to acquire something sooner. And then obviously the position people are in, as far as investments are concerned, they might take the opportunity when one arises, because sort of looking into data coming in people coming into Canada, there's probably in the region of about 1,000 people a day landing in Canada, and a portion of that is obviously going to be in BC and all throughout Canada. People require shelter and homes, so
Yes, they do.
so we're certainly seeing interest but definitely people are waiting to see what's going on as far as the interest rates are concerned. So
Yeah,
we've seen a
that's true.
marginal.
And we just found out that the bank has changed its interest rate to by 50 basis point, which changes the overnight lending rate target to 3 and 3/4, 3.75%, with the bank rate at 4% and deposit rate at 3.75%. So this is a surprise because I was expecting it to increase by 75 basis point. This is strange. Well, it also indicates the rates may be coming back to normal range, like maybe December could be another 50 basis point or 25 basis point, and they leave 2023 as it is. So let's see how it works.
Right. I mean, is there any guarantee that it will be left the way it is in 2023?
Well, there's no guarantee because the report yesterday that I discussed here, it shared the viewpoints of many major banks indicating that if they increase, what's going to happen? There are complications, the risks are there, and it said one of banks, Scotia Bank said, if bank hikes 75 basis point, then they probably have a terminal rate in mind in the ballpark of what FOMC has guided. FOMC is for US, just like Bank of Canada monitors rates for us, they do it there. So FOMC has guided for their overnight rate to 4.5 to 5%, and the Scotia Bank was expecting that it will be, if it is 75%, 75 basis point, they would either stop or downshift to 25 basis point thereon. So this is an expected, result. And at the same time, RBC had said that they continue to expect higher inflation and interest rates to push Canada into a moderate recession. So Bank of Canada is now mindful of a recession hitting earlier than they estimated earlier. So Canada into a moderate recession in the first half of next year, that would put the central bank in a position to pause interest rate hikes by end of 2022. So maybe this is what is going on here.
Right. So everybody is watching and waiting, basically.
Everybody is watching and waiting, but this 75 basis point increase is I would say kind of Diwali gift to all of us, because they spared us from additional 25 basis points.
For now. So
For
yeah,
now,
that's
for now, yes, for now, absolutely. If anyone has to communicate with us, they can call me at 9 of all Cheema stuff down. If you want to speak with us in the studio right now, our phone number is 647-956-1020. Feel free to call us. Yes, Mr. Sura.
yeah. So generally looking at a lot of the uh, projects that have been sold in pre-sale activity over the course of 20 end of 2021 and into early 2022, we're seeing some announcements, or they're sending a completion notice delay. So
Okay.
the impact has sort of any projects which are already shovels in ground.
Mm-hmm.
They're delaying the completion a little bit. Obviously, looking at the costs of construction that's up and coming. So things are really impacting even for the new product, which is flagged for occupancy in, say, end of 2024 or 2025.
Mm-hmm.
We've seen projects which were meant to complete in November of 2022, pushed to September of 2023.
Mm-hmm.
So, you know, individually, people are sort of looking in and thinking, well, what if a developer is facing such an impact, how does that affect the everyday consumer, right? So
Yeah.
everyone's on guard at the present time. Obviously, the construction costs are impacting what the developers can deliver,
Mm-hmm.
and a lot of people are thinking early next year is probably when they're going to have the ability to make the more firm decisions, right? So
Okay.
generally speaking, there's still projects up and coming,
Mm-hmm.
but there's definitely a stall in when they're going to be delivering. So on one of the projects my client bought in, he's already received two notices of an extension
By the
in
builder.
in the estimated completion dates, right? So
I think builder can go past 1 year at the maximum. He can delay up to 365 days.
1 year 4 months is
1 year, four
what
months.
yeah.
Okay.
So
And
that's a
builders
significant.
there also have to be registered with the Tarian Amrit from BC, right?
Exactly, yeah. They must be registered. They must be in good standing.
Uh-huh.
So this is all due diligence for um, any realtor. When you walk into a sales office with your client, before you scribe the offer, obviously
Yeah.
you will have done some research on the builder's history and historic projects, and then give them the data. You pull it off BC Housing, and
Yeah.
then make sure they're in good standing, right? So
Yeah.
at the end
So
of the
what do you
day,
see? Do you see people finding houses more affordable or they are still struggling with qualifications?
well, qualifications wise, they're gonna they may struggle still because okay, regardless of the fact that the price has dropped and your deposit amount may
Hmm.
have dropped significantly,
Yeah.
the payment amounts are going to be in the same range as it was with a lower qualifying rate, correct?
Yeah.
So from my understanding, some of the people are having trouble getting the approvals because they just don't meet the criteria.
Mm-hmm.
So the outgoings are more than or the projected outgoings are a lot more than what can qualify you for the payments you have to make
Yeah.
each month. So
Well, yeah, the payments are too much, and people are actually suffocated these days because either they pay for house or they pay for their groceries. It is very
mhm,
hard to live in the current circumstances, and I think people need to be very strong emotionally, mentally, physically. They can still live with, even like a person like me who is very weak, can't have, don't have muscles, can still live as long as financial health and mental wellness is taken into account. The market is kind of very depressing at the moment for everyone, buyers and sellers in this region of Greater Toronto area. Very few houses are selling, 40% more or less. But the good thing is we are still not into any market which is exclusive for either buyers or sellers. we are in a kind of balanced market at the point. Do you see the same
Right.
situation there? Balanced?
Yeah. It, it seems to be balanced. I mean, we're still seeing new listings up and coming.
Yeah.
There's been more homes under 1 million available in the Abbotsford area than I've seen so far this year.
Yeah.
And because some people are in the position, well, if they're able to wait and their anticipated sales price was 1.2 last year, and they can acquire something under 1 million this year, maybe paying a higher interest rate might allow them to get that property sooner, right?
Hmm.
Some people are still in a position where they think, okay, well, I'll just wait and see how far down the prices go. Um,
Yeah. Well,
so,
creating an affordable housing market also entails more houses available.
mhm.
So that is increasing the supply. So because demand and supply, if they are offset, if there is too much demand, less supply, prices go up. But now in Ontario, the government has proposed or introduced a bill called More Homes Built Faster Act, which will take bold actions to advance the province's plan to address the housing crisis by building 1.5 million homes over the next 10 years. 1.5 million homes over the next 10 years, on an average 150,000 homes every year. So if the proposal is passed, this is going to add more inventory, and they're going to create mixed housing. So I guess they're going to do away with the concept of not in my backyard to yes in my backyard. You know how the certain communities are? They have bigger houses, 100 feet front, 200 feet deep. These communities don't let smaller projects go around them. But if Ontario takes strict action, then maybe they will see condominiums being built around. So affordable houses, high density or mixed density or low density, they might go up in the vicinity of these neighborhoods. So let's see how it goes if it passes,
Well,
which
it's
is
a
a good
promising.
initiative.
It is, yeah. It sounds very good. I hope it's not just lip service. The fact that the same thing is happening here in British Columbia as well.
Mhm.
You know, they want to minimize the amount of uh, hurdles a developer faces when he proposes a project within the community. Whether it's a project for uh, developing multiple parcels of land,
Uh-huh.
high density use. um, it's very, very needed. I mean, when you say 150,000 homes a year over the next 10 years, that may not be that may not make a massive amount of difference, right? I mean,
Mhm.
there's so much land in Canada that I think the regulatory bodies that approve projects should take more of an approach of, okay, well, we have uh, land available in certain areas, and
Yeah.
and in meaning ALR, ALR procedures to get properties out of ALR can take anywhere from 15 or anywhere from 10 to 15 years.
Yeah.
And how do you
Well, that's the
shorten that?
red tape, right? Red tape takes too long, and by the time the builder is ready to build, his costs have already gone up. Now the project is not sustainable anymore
Hmm.
because the delay causes so many factors to change, and then it's really impossible. Some projects just don't kick off then. Many builders abandon the projects and they try to sell off whatever they can make. They will say, okay, take over this project, I'm done with it.
Yeah, there was one developer in the Lower Mainland region. He acquired some prime property. It took him
Uh-huh.
13 years
13
to get
years to get an approval.
the building permit.
Just look at that.
So, it's a lot of gatekeeping happening. So at the end of
Yeah.
the day, I think, they've just announced they've announced a ban on foreign buyers across Canada for residential
Hmm.
properties,
Okay.
right? So how is that going to help? How is that going to help the situation where there's a lack of available homes for
Yeah.
new or young up and coming people, or affordable housing? I mean, a 19 or a 20-year-old with a
Yeah.
reasonable job, if he has a spouse or a not a spouse but a partner,
Yeah.
um, they would be able to afford something which is in the 350 to $400,000 region, if it's
Yeah.
a condominium, right? So I think on the government standpoint, they think that um, they're doing great things in order to create strategies, but it's only holding more things up. I mean, whatever projects that are looked at on a future growth perspective for cities, they should
Yeah.
fast track them.
Yeah.
They should fast track them, I think.
Well, another thing I would share with you, coming from RBC's special report called Proof Point. It says the housing charge boom in Canadian net wealth is over. I don't know if I agree with this or not, but say people who are becoming wealthier through housing, that period is over now. And some bullet points of this report are: Canadians amassed $3.9 trillion dollars in net wealth during the pandemic, largely due to real estate boom that drove home values 52% higher. Well, to some extent, I agree with this. The housing
Hmm.
boom did come, and that was too much money there. In a sharp reversal, roughly 900 billion of that has been lost as housing markets retrench under the weight of rising interest rates and weakening financial markets. So $900 billion dollars have been lost because of increased rates, interest rates. And they say the pain isn't over yet. We expect losses to net wealth to total $1.6 trillion dollars in quarters ahead, leaving Canadians feeling less wealthy and less confident about spending. And the bottom line is the dramatic decline in net wealth combined with the rising prices and higher interest rates will cut roughly 15 billion from household spending in 2023. That's a lot of money. This is one of the factors that will drive Canada into recession early next year. So I'll take a pause. I guess the meeting has started, so let's watch it over. There's no audio.
I think they're just waiting.
Okay, yeah, I seem like audio should be okay.
Limité d'une seule question, et si nous avons le temps, on peut essayer une deuxième ronde. If I fail to do so, kindly state your name and affiliation. And for those in your room, it'll be important for you to press that button in front of you to activate your microphones when asking your question so everyone can hear you. And for those on the phone line, I'm going to ask you please to be careful with your audio. Only unmute your line to ask your question. Then as soon as you're done, please go back on mute. That way everyone will be able to hear both your question and the answer. Avant de poser une question, veuillez vous identifier et, comme toujours, libre à vous de poser vos questions dans la langue officielle de votre choix. And with that, I will turn it over to Governor Macklem for his opening statement.
Good morning. I'm very pleased to be here with Senior Deputy Governor Carolyn Rogers to discuss today's policy announcement and our monetary policy report. Today, we raised the policy interest rate by 50 basis points to 3.75%. This is the sixth consecutive increase since March, and quantitative tightening continues and is complementing increases in the policy interest rate. We also expect our policy rate will need to increase further. How much further will depend on how monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding to this tightening cycle. Our decision today reflects several considerations. First, inflation in Canada remains high and broad-based. Inflation has come down in recent months, but we have yet to see a generalized decline in price pressures. Second, and related, the economy is still in excess demand. It's overheated. Households and businesses want to buy more goods and services than the economy can produce, and this is driving prices up. Third, higher interest rates are beginning to weigh on growth. This is increasingly evident in interest rate-sensitive parts of the economy, like housing and spending on big-ticket items. But the effects of higher interest rates will take time to spread through the economy. Fourth, there are no easy outs to restoring price stability. We need the economy to slow to rebalance demand and supply and relieve price pressures. We expect growth will stall in the next few quarters. In other words, growth close to zero. But once we get through this slowdown, growth will pick up, our economy will grow solidly, and the benefits of low and predictable inflation will be restored. Finally, we're trying to balance the risks of under and over tightening. La décision aujourd'hui reflète plusieurs considérations. Premièrement, l'inflation au Canada reste élevée et généralisée. Elle a diminué ces derniers mois, mais on attend encore une baisse globale des pressions sur les prix. Deuxièmement, la demande est encore excédentaire. L'économie surchauffe. Les ménages et les entreprises veulent acheter plus de biens et de services que l'économie peut produire, et ça fait monter les prix. Troisièmement, les taux d'intérêt élevés commencent à peser sur la croissance. C'est de plus en plus évident dans les dépenses sensibles aux taux d'intérêt comme le logement et les gros achats. Mais il faudra du temps pour que les effets des hausses de taux se transmettent à toute l'économie. Quatrièmement, il n'y a pas de solution facile pour restaurer la stabilité des prix. L'économie doit ralentir pour rééquilibrer l'offrir et la demande et réduire les pressions sur les prix. Au cours des prochains trimestres, la croissance devrait être près de zéro. Mais après ce ralentissement, la croissance va se redresser. L'économie va progresser fortement et le Canada va de nouvelle bénéficier d'une inflation bas et prévisible. Enfin, la Banque essaie de mettre en balance les risques d'un resserrement trop faible ou trop fort. If we don't do enough, Canadians will continue to endure the hardship of high inflation. And they will come to expect persistently high inflation, which will require much higher interest rates and potentially a severe recession to control inflation. Nobody wants that. If we do too much, we could slow the economy more than needed. And we know that has harmful consequences for people's ability to service their debts, for their jobs, and for their businesses. This tightening phase will draw to a close. We are getting closer, but we're not there yet. We are carefully assessing the effects of higher interest rates on economic activity and inflation. And we are being clear with Canadians and focusing on the job we've been assigned to restore price stability for the benefit of all. Let me expand on these considerations and highlight the key points in the Governing Council's deliberations. Le Conseil de direction a abordé, le Conseil de direction a d'abord évalué la situation internationale depuis juillet. L'inflation est élevée partout et se généralise. La plupart des banques centrales ont relevé leur taux directeur pour maîtriser l'inflation, ce qui a causé un resserrement rapide des conditions financières dans le monde. L'économie mondiale ralentit et on a revu à la baisse notre projection concernant la croissance. Des tensions financières ont aussi émergé sur certains marchés ces derniers mois. Des indicateurs donnent à penser que les problèmes mondiaux d'approvisionnement diminuent. Les prix du pétrole et d'autres produits de base ont aussi baissé depuis juillet. La croissance plus lente dans le monde, combinée à ces évolutions, porte à croire que l'inflation mondiale devrait descendre au fil du temps. Cependant, l'incertitude est élevée, surtout en raison de l'invasion russe de l'Ukraine. Il est aussi possible que la volatilité augmente sur les marchés de l'énergie et que les problèmes d'approvisionnement recommencent. During the Canadian developments, the Governing Council devoted considerable attention to assessing inflation, inflation expectations, and the balance between demand and supply in the economy. Since June, inflation in Canada has come down from 8.1% to 6.9%. Though welcome, most of that decline reflects a drop in gasoline prices. Inflation in Canada is broad-based, reflecting large increases in both goods and services prices. About two-thirds of CPI components have risen by more than 5% over the last year. And rising prices for essentials like groceries and rent are hitting lower-income Canadians particularly hard. Short-term movements in total CPI inflation are often dominated by swings in volatile international prices like oil prices. That's why we're watching measures of core inflation closely for signs that price pressures in Canada are easing. Our preferred core measures have stopped rising in the last couple of months, but they have yet to show clear evidence that underlying inflation is coming down. Looking ahead, there are some early encouraging signs. Businesses have said they expect the rate of price increases for the goods and services they sell will come down. And more timely, 3-month rates of core inflation have declined, although they are still averaging about 4%. We're going to need to see these 3-month rates come down further and those declines be sustained. We are also looking for evidence that near-term inflation expectations are easing and that longer-term expectations are centered on our 2% inflation target. Near-term expectations remain high, and our surveys suggest that uncertainty about where inflation is headed remains unusually elevated. Looking at indicators of labor markets and economic activity, it's clear that even though the economy has started to slow, it remains in excess demand. Job vacancies have declined from their peak, but remain high, and businesses continue to report widespread labor shortages. With the economy now fully reopened, households want to enjoy many close contact services they have missed, but businesses can't keep up, and we have seen prices for services rise rapidly. Higher policy rates are beginning to slow demand. Higher mortgage rates have contributed to a sharp slowing in housing activity from unsustainable levels, and consumer and business spending on goods is moderating. This has led to declines in house prices and is exerting downward pressure on goods prices. Moving forward, we expect the effects of higher interest rates will continue to work through the economy, moderating household spending and business investment. Slowing global growth, particularly in the United States, will also weigh on Canadian exports. We project GDP growth will stall through the end of this year and the first half of 2023 before picking up in the second half. Annual average GDP growth is therefore projected to decline from about 3.25% this year to just under 1% next year and about 2% in 2024. With growth below potential for several quarters, excess demand in the economy dissipates and the economy moves into excess supply in 2023. Putting the global and Canadian outlooks together, we expect inflation will hover around 7% in the final quarter of this year, fall to around 3% by the end of next year, and return to the 2% target by the end of 2024. La Banque du Canada a pour mandat de maintenir l'inflation à un niveau bas, stable et prévisible. Mais on est encore loin du but. On juge que les risques entourant notre prévision d'inflation sont raisonnablement équilibrés. Mais comme l'inflation dépasse beaucoup la cible, on se préoccupe surtout des risques à la hausse. On sait que les taux d'intérêt plus élevés sont difficiles pour bien des Canadiens. De nombreux ménages sont très endettés et les hausses de taux viennent abordir leur fardeau. On ne veut pas que cette transition soit plus difficile que nécessaire, mais on reste déterminé à remplir notre mandat. Des taux plus élevés à court terme vont faire descendre l'inflation à long terme. Il faut traverser cette phase difficile pour revenir à la stabilité des prix et une croissance soutenue. The Bank of Canada's job is to ensure inflation is low, stable, and predictable. We are still far from that goal. We view the risks around our inflation forecast to be reasonably balanced, but with inflation so far above our target, we are particularly concerned about the upside risks. We are mindful that adjusting to higher interest rates is difficult for many Canadians, and many households have significant debt loads, and higher interest rates will add to their burden. We don't want this transition to be more difficult than it has to be, but we remain focused on our mandate. Higher interest rates in the short term will bring inflation down in the long term. And getting through this difficult phase will get us back to price stability and sustained growth. As we move forward, we'll be watching carefully to assess the impact of higher rates on spending and how this is feeding through to price pressures. We will also be watching to see how global supply disruptions resolve and to what extent this translates into lower inflation in Canada. Finally, we'll be watching inflation expectations closely to assess how households and businesses are responding to slower growth and spending. And with that, Senior Deputy Governor Rogers and I are pleased to take your questions.
Thank you, Governor Macklem. Just before we get going, if there are any reporters who have joined the call in the last few minutes and you want to ask a question, please send a brief email to communications with an S at bankofcanada.ca. We'll do our best to get you in the queue. That said, I've got at least 10 people here in the room and 3 on the line, so we'll need to be expeditious here. We'll go to questions now, starting here in Ottawa, and we'll go first to Mark Rendell of the Globe and Mail, please.
Hi, Governor Macklem. Thanks for taking my question. In the monetary policy report, you note it's as likely to see several quarters of negative growth as it is to see positive growth. Are you saying a recession is likely at this point, or a possibility at this point? And how is that, I guess, how have your assessments of a possible soft landing changed with the new update?
Mark, our mandate is clear. Our primary responsibility is to restore price stability. We have been raising interest rates rapidly to achieve that goal. And the other thing I would stress is by front-loading our policy response, we're trying to avoid the need for even bigger interest rates down the road and an even more pronounced slowing. As you mentioned, our latest outlook, we have growth stalling for the next several quarters. To be more precise, growth is close to zero in the fourth quarter of this year and the first two quarters, the first half of next year. What that does, what that means is that, yes, a couple, 2-3 quarters of slightly negative growth is just as likely as 2 or 3 quarters of slightly positive growth. That's not a severe contraction, but it is a significant slowing of the economy. And we certainly are seeing clearer signs that the economy is slowing. With growth essentially zero for the next several quarters, that will give supply the opportunity to catch up with demand, and that will relieve price pressures in our economy. Unfortunately, there's no easy out to restoring price stability. We actually need a period of slower growth to let supply catch up and relieve those price pressures. As we get through that period of slower growth, growth's going to pick up, economy's going to grow solidly, and we're going to have low inflation. So Canadians are not going to have to cope with the anxiety of high inflation.
Next up, we'll go to Raul from Epoch Times, please.
Thank you for taking my question. Given that the interest rate changes take 18 to 24 months to have full effect in the economy, basically, how will the Bank of Canada know when enough is enough? Like if you're looking at sort of backward-looking measures like currently reported inflation or even 3-month inflation trends, and given the embedded path of interest rate hikes that you have in the projection, we can see that inflation is supposed to get to 2% by the end of 2024. But is it all a model-driven thing that you will know when enough is enough, or it's kind of hard to say by looking at what measures are reported? So how can we get a better idea of when enough is enough in terms of interest rate hikes?
Okay, you packed a lot in there, but let me try to address your question. First of all, the way the transmission of monetary policy works is we raise interest rates, that slows spending, and then that translates into lower inflation. That relieves price pressure and inflation comes down. So we are going to be watching closely how the effects of higher interest rates work through the economy. And first of all, how they're affecting spending. We're already seeing clear signs that the interest rate increases that we've already done are having an impact on the economy. You've seen certainly contributed to a sharp slowing in the housing sector. You're starting to see purchases of bigger ticket items, things that are typically bought on credit. You're starting to see demand for those things slow. You've already seen house prices come down about 10%. It is going to take, as you highlighted, it is going to take some time for the interest rate increases we've put in place to work through the economy. We're going to be assessing how that works through, and we're also going to be watching closely for how that gets translated into low inflation. With respect to, is this an entirely model-driven exercise? No, it's not. Models are very useful, but models have limitations, and they have particular limitations when you're going through something that is unprecedented as a pandemic, and you're bouncing back, and you're still dealing with the fallout of the pandemic. There's also a war in Europe, so these are not things that our models are well equipped to deal with. Models are certainly useful, but they need to be used with care.
Oh, there we go, Mr. Sura. You heard them, right? I stopped getting your audio, so I don't know what's going on here. Give me one. Did you mute your microphone by any chance?
Can you hear me?
Yes, yes.
So I like the last question the guy had. How do we know when enough is enough?
Me
right?
too, yes. That was phenomenal.
So I don't understand. I mean, they're wow. Okay, they wanna curb the spending.
Yeah.
To allow the supply chains to catch up. Okay,
Yep.
they're going to catch up. How do they catch up when there's so many regulatory hoops and hurdles someone has to go through in order to provide said product, right?
I know,
So
but the
there's a
Bank of Canada Governor McCallum clearly made the point that they will continue with this regardless of how difficult it may be for the populace. They're not going to stop, right? It's only generous of them not to go 75 basis point this time because they have a recession coming. And they can look into recession's eyes right now as it comes. Maybe you and me are still farther from that side, but these guys can see it coming. So it's coming like this, step by step, and they are seeing it. Maybe they have special binoculars, which we don't have. And all these things translate to the action they did today, that is 50 basis point rather than 75 basis point. So I hope that next change would be 25 basis point. So that could be good. And he said, economy is slow but is in demand, that which is driving the prices up. So and he also told that they want to kill the demand. They want to stop spending. So once people stop spending, that will ease pressure on the prices and will eventually bring the inflation down. And core inflation, which is inflation of a basket, price changes in the basket of items, excluding highly volatile items like rates of mortgage, interest rates, gas prices. So they will be taken out to find the core inflation of how things are moving. And well, this is a good point when he asked, how do you see enough is enough?
Yeah. So I guess, people can look forward to the end of 2024.
Yeah, and he
Now,
says economic growth will start to zero. It will stop altogether before they start making allowances, changing interest rates again, then it will start moving. So they are willing to bring whole economy to a grinding halt. You want to hear him more?
let's see what his final words are.
Okay, here he goes.
Shelter inflation represents about 40% of the CPI. This especially affects low-income families. So what is your message to them today, given that you are signaling your tightening phase is not over yet?
The message to Canadians is, look, we know inflation's too high, and we know it's hitting you everywhere. It's hitting you shelter, rent, groceries. Roughly 2/3 of the components of the CPI basket, 2/3 of the things the average Canadian buy are going up more than 5%. That's hurting Canadians. That's why we're raising interest rates. By raising interest rates, we're going to slow demand in the economy, and that will relieve price pressures. We also know adjusting to higher interest rates is difficult for many Canadians. And we are assessing, we're watching that impact very closely. But unfortunately, there is no easy out to restoring price stability. We actually do need to slow the economy to relieve the price pressures. But when we get through this slowdown, growth's going to pick up, the economy is going to grow solidly, and we're going to have low and predictable inflation. That's the destination.
We'll go next to Paul Vieira from the Wall Street Journal, please.
Following up on previous question, is this a pivot from the Bank of Canada? Should we take this as maybe a pivot by the Bank of Canada that, as you said, very big or even big rate increases are now coming to an end, and we're going to have a return to more traditional quarter point increases given the economic forecast?
Well, we did 100, we did 75, today we did 50. We've signaled very clearly that we expect rates will need to rise further. That could mean another bigger than normal increase. It could mean that we can move to more normal size 25 basis point increases. We've been very clear on the things we're watching as we take those decisions. And it's going to depend on how the effects of higher interest rates are feeding through to slowing demand. It's going to depend on what we see in inflation and inflation expectations. And to some extent, clearly, inflation is going to be affected by international developments and how those global supply chains disruptions resolve.
Thank you. Next question will be Heather Scoffield of the Toronto Star, please.
Morning. Governor, I'm wondering how you are assessing your credibility these days, and if that plays into your decision on rates at all. Do you have to raise rates any? Do you have to be more aggressive, I guess, now that in order to keep your credibility, now that you have politicians on all sides kind of questioning you?
Look, we need to do what we have to do. We have a very clear mandate. We're committed to achieving our mandate. We are trying to balance the risks on both sides. We don't want to under tighten. Inflation's not going to fade away by itself. And if we ignore the problem, if we're half-hearted in our response, inflation, Canadians will have to continue enduring high inflation. They'll have to continue to cope with the anxiety of high inflation. Nobody wants that. We're also very conscious, though, that if we over-tighten, the economy will slow more than is needed. That'll make life more difficult for Canadians than it's needed, and will undershoot our inflation target. So we don't want to do that either. These are difficult decisions. I will say that the independence of the central bank becomes more important when the decisions are difficult.
Bon, prochaine question vient de Olivier Ferron-Boisset du réseau TVA.
Bonjour, Monsieur le Gouverneur. Merci de prendre nos questions. Vous dites que vous voulez balancer les risques des deux côtés, mais tout de même, il y a des gens qui sont inquiets de devoir peut-être apporter les clés de leur maison à la banque parce qu'ils ne peuvent plus payer leur hypothèque. Alors, comment vous assurez qu'une hausse supplémentaire n'est pas une hausse de trop? Quels sont les indicateurs?
Well, I won't understand any word of French. At least it's I don't know about you, but he is he's doing great, and let's see how it plays out, because it will take a longer time. If interest rate goes up today, it doesn't start affecting the next day. People start feeling the effect maybe more than 6 months. He says 18-24 months. That is a longer period. 18-24 months for an effect to take place. I think that is too much. The reporter actually exaggerated the number. What do you think?
I think having that ability to question him was it's important on the sense that they've got to deliver the news. Now, the news is going to basically put a lot of fear in the consumers out there. So
Yeah.
Joe Bloggs down the road, he'll be thinking, well, how am I going to make my payments?
Mm-hmm.
Right? So it's going to cascade into. So I think he mentioned that it might be 25. It might be higher than usual. The next one.
Yeah.
Right? And
Yeah.
how I think the question should have been asked is, how did we get to this state in the first place?
Blame it on Russia.
No, well, I mean, Okay, so here's the thing. Switzerland has 2.5% inflation rate.
Well, that's a good country. Let's move there.
No, hang on.
Yeah.
That's next
Okay.
door. That is next door to Russia. So
Hmm.
maybe they should ask them questions and say, how are you doing this?
Yeah.
How are you managing to have stabilized inflation rate? I think, yeah, I think at the end of the day, my real 2 cents would be, let's hope and pray that people are prepared for their for the next 2 years, right?
Yeah, well, what I think is there's no simple reply to any question that concerns the economy. There are thousand and thousand variables at macro and micro level that determine which course the economy will take. But I don't agree that any change in policy rate will take 24 months or minimum 18 months to take effect. I'm thinking maybe 3 months, 2.5, 2 months, because we have been seeing it. When the Bank of Canada started changing rates in March this year, the effect was felt immediately. House prices started tumbling down. It was not that people waited more than 6 months to see the effect of price changes. It takes long time. Big ticket things are literally making a lot of time to alter. Sorry, not taking long time. I stand corrected. They show effect right away, right? But just we heard him, the governor, that he evaded the question as to recession. He didn't actually confirm nor denied it that there is a recession close by. And I think anyone in his position will do the same. It's political statement, even though he is not a politician. But well, let's see how it plays around. But the bottom line is, it's a good news that Bank of Canada didn't go higher than 50 basis point, and they also signaled that next increase may be 25 basis point, and then they will just call it a day. Then wait what happens in 2023. We are at 11:33 a.m. It's time to say goodbye. Before we say goodbye, we'll see what our host, whatever guest Mr. Amrit Sura has to say.
I'd say that yeah, like you said, keep your mental health and well-being in check. Just be cautious of the next few months as far as that's concerned. Just stay in a positive state of mind. You've got to continue on with your journeys.
Yeah,
We're here to
absolutely.
help. Yeah.
Absolutely. Thank you very much, Amrit, for connecting. If you need any assistance with home purchase, sale, investment, or anything real estate, please do not hesitate to call Amrit Sura at 778-999-1531. People who have 999 in their number, the middle part, they are always great people. So is Amrit Sura. So feel free to give him a shout. And he has 2 1s, right? ਉਹ ਕਹਿੰਦੇ ਆ ਨਾ ਦੋ ਯੱਕੇ ਆ ਨੰਬਰ ਦੇ ਵਿੱਚ ਯੱਕਾ ਹੀ ਕਹਿੰਦੇ ਨੇ ਜਿਹੜੇ ਤਾਸ਼ ਦੇ ਪੱਤੇ ਹੁੰਦੇ but before we end the session, just like every day, we sympathize with those people who have lost their beloved ones, and we shall pray to God for peace to the departed soul and strength to you to overcome this loss. Thank you very much. Enjoy your day. We'll see you tomorrow. I think I may have to skip tomorrow's session, but we'll see. I have an important meeting tomorrow, Amrit, which I can never miss. And that runs from 9 a.m. all the way to 1 p.m. It's Mississauga Registered Board's meeting, where I am one of the directors. So hopefully we'll see how to play around the next episode, but stay cool, stay happy, forget about inflation, forget about rising rates. Keep your mental wellness in great shape. That's all you need. Don't worry about anything. Things will get to normal very soon. The way they become abnormal is the way they become normal too. Good day to you all. Enjoy your Wednesday, and we'll see you